Assume you all can see my screen here. Do you want me to maximize this, or is it okay if I leave the thumbnails over here on the side?
That's fine. We can see it. Yeah.
Hello, everybody. People are starting to arrive. Welcome, welcome. This is going to be a more interactive session since we're talking a lot about the Alternative Investing Club and things we can do in the future to make this a world-class investment club. Definitely at least getting better every single time that we meet. Hey, Glenn. Hey, Bob. Hey, Jeff. Jitendra. Hey, Glenn.
Hi, Daniel.
Feel free to put your video on if you want. This is going to be a little more discussion at the beginning. Hello, Ashish.
Hey guys.
Good to see you.
You too. Glenn, no background today? Is it flag at half-mast day today for you?
It's blurry day. Let me go flip over to my background.
Blurry day.
Actually, I have kind of an interesting scenario going on right now. I share a fence with the local elementary school, and the loudspeaker is broadcasting lockdown at the elementary school. And I kind of stuck my head over the fence to see what was going on. There's nothing going on as far as I can tell. So I honestly have no idea what's going on over there. I tried to look at the news and I didn't see anything.
So tying into my background then, Daniel, I guess the question is the chicken or the egg. Is it broadcasting lockdown because you stuck your head over the fence, or is it?
No, my daughter actually told me about it first. I was sitting in my library with my headphones on.
That's what all of the lockdown initiators say.
That's right. I wasn't anywhere near there.
It wasn't me, man. It wasn't me.
I think that the school actually has a day off, so they might be running a drill or something. I don't know.
Yeah, Beaven School District has a day off today.
Yeah.
So there's lockdown and lockout. Lockout's a bad one. Lockout means there's somebody trying to get in.
Yeah, well, they were saying lock down, lock all doors, lock and barricade all doors or something. So I'm guessing they're going through a drill. But
it's really effective if they're having a day off.
Yeah, nobody's there. Worked well. Just like my my whistle that causes elephants to flee. No elephants around.
My brother is a high school teacher, and he's saying the last time they had a staff development day, there was no students. These two kids walked in, and then they disappeared. I'm like, what are the kids doing in the building? And they went on a big hunt for them. They found them smoking pot in the bathroom. And these two kids were so high they didn't realize that there was a day off. So they broke into school on an off day to smoke pot.
Wow.
Well
That's
done.
dedicated.
Well done.
Oh my God.
Definite
dedication.
dedication.
Like, man, you guys, yeah.
I mean, this is awesome. They're ensuring that their perfect attendance remains alive. It's staff development day, so they're bringing something to share with the rest of the classmates. I'm sure the teachers were happy with that.
No, there's no students.
No, I understand that. So they can give it to the teachers to share with all of everyone else, and development ensues, right?
I'm sure that's the way they saw it.
Note that Glenn has a future in politics.
So I'm wondering now, when we eventually post this video, do I edit this conversation or just
wait? Are you recording? I
think I've got it set to automatically record as soon as we enter.
Just leave it. It'll be fine.
All right.
Breaking into schools.
I think we've got a quorum of people here, so we can get started. I'm hoping that in this beginning part here, we have a lot of interactivity. I had the fortune of being able to go to Columbus, Ohio last week, and I attended the Left Field Investors Club, and they're a passive income investing club. that has been public, or at least started for the last 3 years or so. You can go to leftfieldinvestors.com and look them up. They're a good group. I like a lot of what they do. And part of my reason in going over there was to pick up ideas for things that we can do in this group to foster community, to get people to network together better, just to make it a better club overall. And I know that you guys have sent me quite a few suggestions on what to do. And so I think we're going to start addressing some of them. Before I do that, though, does anybody want to chime in with thoughts about things to do with the club before we dive into at least the list that I have here? And we'll keep it dialoguing all the way, so you don't have to speak up now. Just any opening thoughts.
What about a book club?
A book club. I love it. Yeah. Actually, when we get to slide 3, we may have something to it's not specifically about books, but about subclubs. So I like that idea. And actually, I would highly suggest, I've been thinking, this is off the top of my head, but I'll do it anyways. So let's start a contest for this week of whoever posts on social media using the hashtag Alternative Investing Club and gets the most likes and comments. I will send you a free copy of The Hands-Off Investor by Brian Burke. Now, I know, Glenn, you already bought it. I was going to give it to you for helping me out. And then you told me you had it already. But we'll just throw that out there. I will look Friday at 11 a.m. next week. And if you post it, either in LinkedIn or Facebook or Twitter, I think those are the main platforms I'd look at. But if you post it on a different platform, send it to me. And whoever has the most, the sum of the comments and the likes, whoever has the most, I'll send a good book to. All right. Having said that, we've been looking for a way to have discussions in this group online for quite some time. For a while, we had the Facebook group. It's still there. I still post the events in it. But it's not terribly active. I've been on LinkedIn quite a bit recently, and I really think that LinkedIn's the right place for this. Quite a few people in this group have told me they don't want to be part of Facebook. And, honestly, I hadn't been part of Facebook for a couple of years before that either, really. So I don't blame you there. But LinkedIn is a professional group. I've got a QR code right here that'll take you right to our newly formed Alternative Investing Club group. Feel free to post there. I'm still learning the moderation controls, so you can probably put stuff in that'll be up there for a while before I figure out how to get it down. But I'm just looking forward to people talking about passive investing, the deals they've found, what they're doing, their short-term rental, any real estate topic. It could be oil or gas, it could be cryptocurrency. So feel free to put any topic in there that's on the subject of Alternative Investing Club. And hopefully this will be a good way that the people in this club will actually get to see each other and know each other. I'm on LinkedIn. Feel free to check me out there. I'm trying to be active in posting, but I'm kind of working my way into a posting rhythm. So yeah, any thoughts about this, the LinkedIn group? Anybody particularly hate the idea?
I think it's a great idea, Daniel. I think there's quite a bit of activity on LinkedIn, like you said, Dan.
Yeah. I have to admit that most of the good professional interactions that I have are on LinkedIn. So I'm going to check that out. All right, next. Subclubs. This is something that we actually started originally doing this before the pandemic to a certain extent. We had a Phoenix club that was meeting for lunch. We had a group up in Hillsborough that was meeting for like half-hour sessions. But I want to formally introduce the idea of subclubs. And yes, I did use AI in order to generate that graphic. You can tell by the fact that it says club, club plans, club, and then cluns, because AI apparently can't spell. But subclubs. So the idea here is that as a community, there are, of course, different people here that have different interests. It's not all, commercial real estate. There are people that have all sorts of different interests. And just like the clubs that we had at Intel, where the Intel REI Club was one of them, and our particular interest was real estate at the time, it makes a lot of sense to have sub-clubs. And so as a passive income community, we want to encourage our members to network and to find like-minded people. And so we're introducing the idea of a sub-club. And the main thing that we need to do logistically in order to make this work well is that every club needs to have a champion, somebody who's going to spearhead the club, who will, organize whatever events that club is going to do. From the level of the alternative investing club, we're completely hands off. I assume for the most part, unless something happens, but it's going to be run by you, the members. We need a person. If you have a burning interest to have a deal analysis club or a French American club or whatever type of club you want, feel free to email me and say, hey, I want to run a club. And I will announce you next week and Friday saying, hey, there is a club for, maybe the Women's Passive Investors Club, or the Indian American Club, or the Short-Term Rental Club, or the Folsom Community Club, whatever your topic happens to be. Feel free to stand up and say that you want to spearhead a group and you're willing to help organize the activities. And I think this here is going to be a great way for us to network, to find people in passive investing that are like us, and to really spur the community on. It's all about growing the community. All right, having said that, of course, we've got a couple of values that we want all our clubs to embody. And I think anybody who's worked at Intel knows these types of values, right? Have respect for everybody, open communications, inclusivity, no bullying, encourage participation. We're all here because we're investors. We want to continuously learn. That is, in fact, the mantra of the Alternative Investing Club, is continuous lifelong learning. Learning to be a better investor, learning to be a better financial handler, learning to be a better person, because we are building our own cultures of ownership. Feedback is welcome, community engagement. I think that anybody who's been on most clubs, either online or offline, have a code that's like this. If there's, I really kind of threw these together quickly, so if there's something really glaring here that I missed. The clubs themselves are completely community led, so I'm not going to be checking up on you or anything. And hopefully, if there's any divisions or problems, it can be handled just internally as well. We're going to see how this goes, and hopefully we'll have some people that have some great topics to pull people in around. All right. Any thoughts about that? Anybody want to run a club?
I'm happy to help.
Yeah.
If needed. But I just wonder if, if there's enough interest, we should probably do it over here. But if people want to break out, right, certainly happy to do it.
Sure. And a lot of times I see these also as clubs that are physically located somewhere. So, if the Phoenix group wants to go down to the cafeteria and all have lunch together, that's great. All right. And it's up to the champion as to when and where you meet and how often, and it's completely up to you guys.
Hey, Daniel, from an infrastructure standpoint, do you envision, setting up subspaces within AIC's, domain to foster the communication, or is this truly, a offline sub club? So if I set one up for Chandler, storage people or something, right, and the three of us that care about it are having lunch every Tuesday, you're not going to know if there's a sub club or not. So what and how, so my question to you, what are you thinking about how formalized or unformalized, and how much of your hosting environment do you want to leverage, or is this using LinkedIn, or what
honestly, I would love to see clubs posting on LinkedIn. Maybe they use the hashtag of their club name. Maybe there's a way to actually segment them in LinkedIn. I'm not sure. I would love to see discussion online from the clubs. but you don't have to. But I think it would enrich the overall club if we saw that. All right. So if you're interested, and there's a lot of chat going on here, which I haven't looked at. So, okay, it's mostly about the lockdown at the school. All right. Next, I've been able to talk to a group called Tribvest quite a bit, and this is going to be an interesting potential opportunity for our club. So Tribvest is a software as a service platform that helps investors come together into an LLC, and they have all the software that you need in order to form basically your own group investment. So you could picture 10 people coming together. Let's say that there's a sponsor out there that you want to invest with, and you find 10 other people that want to come together. You might come together and form a tribe on Tribvest and bring, who knows, maybe between the 10 of you, you bring 500K to that particular person, and you say, hey, I want to have better terms because we're bringing a large amount of money. It doesn't have to be a negotiating tool. It could just be a tool for a group of people to come together and invest. But I've been talking with Tribvest, and I think that from the point of view of an investment club, and I know I've had people in this club ask me, how do I get into groups with people and invest together with people? This is a great way of doing it. And there's no partnership on any other level other than I think they're a great tool to use. I will actually, in terms of Good Samaritan Capital, tell you how I'm going to be leveraging Tribvest, and I'll talk about that a little bit later. But this is a tool for either accredited or unaccredited, just people who want to come together into an LLC. I know that, for instance, I think one of the founders of Tribvest actually has a tribe with 3 other people where they invested in a racing horse, and their LLC owns that racing horse, and they run the racing horse. A lot of other people use it in order to get into passive deals together with a community of people. And so the benefit of this is that if you don't have 50,000 to put into a deal, you could find 10 other people that all want to put 10,000 in. And so I think this is going to give us a little bit of flexibility. And we're as a group, I'd like to formally promote them because I think that this is something that would be useful to a lot of people in the group. So check out Tribvest. There's a couple of different ways that they organize tribes. For instance, if you want Tribvest to handle your taxes and your K1s, they have extra add-on services that you can use. But check this group out. I think that they will be very handy when people in this group want to come together and potentially invest with someone. So I just wanted to throw them out there and say that over at the Left Field Investors Conference, I got to meet the founders, and they seem like very nice people. They're trying to grow the idea of people grouping together to invest, which I think is very much in accord with the Alternative Investing Club.
Hey, Dan, quick question. Yeah. The pricing, I mean, I've used one of these companies before, and it by the time you add up the upfront costs and sort of the yearly fees, it does add up quite a bit. So
it does. I think and I'm not going to go into a deep dive on their pricing plans, but I think there's one level where it's like $30 per month. There's another level if the taxes are included where it's $150 per month. So yeah, definitely check out the expenses, and you need to probably put enough in that it's worth using the software.
Hey, Daniel, just maybe one other question. Maybe I'm not totally construing the intent. So in a typical syndication, you've got one or more general partners who are organizing and managing the deal, and then you've got one or more limited partners that are funding it and so forth. Is the intent here to use this as a surrogate general partnership, or I mean, a lot of what we talk about in this club has a tendency to be purely more limited partner oriented in the passive deals that people can get in on. So I can't imagine that there's a bunch of limited partners who happen to log into this site, and suddenly the magic all happens. There's still like deal management and all the roles and everything that need to happen. So
Yeah.
how does this fit? How does this fit in with that?
Well, in each tribe, there does need to be somebody who spearheads the tribe and kind of manages the tribe. But one use case, for instance, is maybe an operator that's buying commercial properties has a couple of different buy-in levels where, let's say, if you put 50,000 in, you're getting a 7% preferred return. If you put 100,000 in, you're getting an 8. If you put 500,000 in, you're getting a 9. And you can bring together enough people to add up to that 9 level. Well, this would be a way that you could all come together into an LLC, and then as an LLC, you can come into the deal with $500,000, for instance.
I see.
And so it's a way of grouping together, and you need to make sure that there's a benefit for doing that. Of course, this is something that I could have used when I was buying the short-term rental. I have 2 other partners with my short-term rental, and I personally, for the short-term rental, it's probably a little, it's a little heavy on the overhead. I don't need voting with my other 2 partners. I just call them on the phone, for instance. But if you're in a big enough group that you need to have voting tools, you need to maintain an ownership percentage table, something like that, then this is potentially a good way to do that.
Thanks.
All right. More AI generated graphics where they can't spell. So next, the leadership team. I would love, when I was at Intel, I had probably 5 or 6 people that were always on the leadership team, and they were helping me out with various aspects, from interacting with HR to updating the SharePoint to doing things like that. Ashish has been very useful in finding speakers, and I thank you very much for that. That's one of the things that we would do on the leadership team, and it's just helping out with all of the behind the scenes work, like maintaining the web pages or moderating the LinkedIn and Facebook groups. If you're interested in helping out this club and helping it scale, then I would love it if you would join the leadership team. So I'll just put in that plug there. And if anyone joins this week, we'll announce it next week. I don't know. I kind of feel like, Ashish, you might be on it, even though I never asked you if you wanted to be on it.
I think sorry, you may have asked. I don't know, but I'm happy to help and share.
You've definitely been a help finding speakers, so that's great. And Glenn also. Glenn has been posting inside Intel and putting it on the calendar in there, and so I thank him very much for that. All right.
Hey Daniel, like as far as the leadership team goes, would the mandate of the club just be for creating content for these Friday meetings, or would there also be a deal sourcing aspect to it as well?
Well, I'm glad you asked. Not that one. Where did I go? Oh, I skipped a slide. Meet the sponsors. So you guys have told me very specifically that you want to find people that are coming in and basically talking about their deals, giving the numbers, pitching their funds. And so starting in 2024, we're going to have a Meet the Sponsor series. And this will be once a month, at least starting out, maybe more if the club wants more. But once a month during our regular Friday meetings, we will bring in a speaker who's not there. Well, assumably they are there to educate, but they're also there to present their own investment. And you guys have been very clear that that's something that you want. And so I am currently talking to a number of people right now to try to bring in good, high quality speakers. Of course, I have to put in the caveat there that I'm not associated with them. The Alternative Investing Club is not associated with them. And we're not necessarily endorsing the deals that they have either. And we're obviously, as a club, the club itself is not investing in any deals. So just be aware that the people that we bring in, we're going to do a best effort in order to make them high quality people, but do your own due diligence. And so I'll just put that there. If anybody has suggestions for who to bring in, I would love to hear that. And so feel free to email me, or I'll just stop talking right now and let anybody who wants to chime in.
Another maybe comment or thought as it ties together sponsors, deals, sub club, Tribvest. Do you have any thoughts, Daniel, around having official deals that the club itself invests in and using maybe a subgroup or whatever for something like that, that could pull together, for exactly the use case you mentioned, right? Someone who wants to do a 5K instead of a 50K or whatever,
Yeah.
or whatever the leveling needs to be, right?
Yeah, no, that's exactly the idea. Is we have these small sub clubs, we have Tribvest as a potential way to manage it, and we're bringing in sponsors. And so the idea here is that as a club, if we want to go in and have a group of people come and invest in deals together, these sponsors that come in, you can come to the club and we'll put together an LLC, assuming that people want to do that. But it'll be something that we can organize, I think, a little more officially through the club. I know there are groups out there, and maybe Ashish, you can comment on this. The 506C group does this quite a bit, I believe, where they bring in deal sponsors and you invest, basically getting better terms because you go through a club.
Yeah, it's 506 investor group.
506.
Yeah, it's 3,000 plus members. You have to be accredited. And that's the difference, right? Is they have to be accredited, which is how they can line them up. But they've got speakers all the time, and then they'll also list feedback, right? That which is very helpful to see when somebody has invested with a company before 3, 4, 5 years ago, right? They're like, hey, are they delivering what they promised or not? So, but why once a month? Why not twice a month? What were you thinking there?
Starting slow. I've got no problem with twice a month. I just, if it doesn't work out once, I don't want to do it twice.
Okay.
That's all.
Yeah. Our only problem is we can't ensure people are accredited, right? So,
yeah.
So
we could put together a specific sub club for accredited investors, and have the talks over there. I suppose that might be one way of handling it.
That was where I was headed, Daniel. Is otherwise the only deal people you're going to get on a Friday is going to be someone who's open to non-accredited as part of their pitch, right?
Mm-hmm. Right, which they can't pitch. They can't pitch usually because of SEC rules too.
Exactly. So it's like it's like heavy education or something, or whatever that sort of gray line looks like. So it seems like without either restricting the audience specifically on a Friday, the idea is problematic in my view, or you're going to have to do something like what Ashish is saying. You have to create a sub club to restrict the attendance for people that you already know are accredited in order to be able to get deal pitches done, unless I'm missing something.
No, I don't think you're missing anything. And I think that's good feedback. If we bring in a person that says they can only speak to accredited investors, actually, I should put out a vote here and maybe just put into the chat. If a person comes in and they can only speak to accredited investors, would you like that to be on a Friday? Put a 1 down if you want that. If you want it to be at a separate time, maybe a Thursday or a Wednesday, put a 2 down for that. Okay, so
unanimous.
People like Friday. So and all I will say is that because of the SEC, a lot of times people that are presenting deals can only take accredited investors if they're speaking publicly. So just be aware that for unaccredited investors, it would be education only. And I know that's a significant group in here, and that's one of the reasons why I wanted to explore Tribvest a little bit to see if it's possible to put together larger groups into deals that take unaccredited investors. All right.
Okay. Follow-up question, Daniel.
Yeah.
So maybe I clearly don't understand the SEC well enough for the rules on this. But can a 506C operator come in on a Friday afternoon and say, I'm talking only to the accredited investors in this group of 150 people. The rest of you can just listen and pretend you're not here.
Yeah. 506C operator.
That's okay.
paint their picture on a bus stop. They can publicly advertise. So that is okay. And the group just needs to be aware that, when they're usually a 506c operator, the onus of determining whether a person is accredited or not is actually on the operator. So there are these companies out there that are third-party accreditation services. I use one of them for the fund that I just launched. So I have a third party, for instance, that goes through and does a verification that you are an accredited investor, and that's required by the SEC. And so just be aware that in order to go into a deal, you're probably, hopefully not going to lie your way into it saying that you're accredited when you're not. They go through and do a check. All right. Any other thoughts here?
Daniel, is there a cost to that?
To the third party accreditation service?
Yes.
In my fund, I pay $50 per person, but the investor themselves doesn't pay anything. I think that's usually how people run it.
Hey guys, I can in the chat, I'll put in a form that you can all go to and have a CPA or your financial advisor sign, which certifies you're accredited. And I just keep a copy of that available, right? So if somebody asks, I just send them a copy. So I'll put it in chat.
Yeah, and actually the result from the third party verification, you can use that. I believe, I need to look up exactly how long, but it's like for 1 or 2 years. All right, so lots of changes going on here. I am looking forward to seeing you all within the LinkedIn group. Does anybody else have any other thoughts for things we could do to change up the club a little bit and turn this into a club where we're all networking and we've got a vibrant and active community?
What I would love to see people do is share what investments they've made. And I'm happy to do as well, right? So, and then maybe bringing, if you've made an investment, which you're thinking of making, right? Have the sponsor come in and present.
Yeah, absolutely. And maybe we could have a thread every once in a while on the LinkedIn group, share your investment, and people could share in the comments. And then if somebody wants to, they can come in and speak here in the club too.
And the LinkedIn group is private, Daniel?
No, it's open to the public. Yeah.
Why do you set it up that way?
Honestly, I hadn't given it too much thought other than the Alternative Investing Club is public now. So it's available for people to join. Actually, I'd love people to join through the LinkedIn group and come to our meetings. So that's one of the reasons.
Yeah, I don't know what other people think, but I think it might be highly advantageous to make it a private group.
Private group?
Still
Okay.
anybody can join, but have it at least be a group where people can chat open and freely without worrying that millions of people are watching.
Yeah.
Anyway, other thoughts?
No, I see your point there. Maybe what we should do is we should create a sub club where, members private discussion or something to that effect.
I think you'll have a much richer discussion if you make it private.
Yeah. Okay. I'll do that. I'll create a private group too. All right. Any other thoughts?
In addition to sharing investments that we've made, it would also be interesting to have just a pipeline of potential investments, maybe ones that we haven't made, and maybe we can segment it to accredited investors where we send a newsletter out, of different deals, and maybe as a group we can subscribe to different pipelines and publications that publish these types of deals, so we can consolidate them as a resource for all of us. So it'd be great if, as a group, because some of these feeds are thousands of dollars, right? Like you could subscribe to some of these, they're quite pricey, but maybe as a group, it makes it much more affordable, and then you can disseminate it privately to the accredited investors that are a member of AIC.
Yeah, or we could have a group that's just totally dedicated to, people posting deals that they find, so that we're crowdsourcing it in effect.
Yeah, and that could be part of it too. But also, it wouldn't have been great to get into Airbnb pre-IPO?
Yeah.
So, so getting access to those is requires quite the network sometimes. But since we're a growing group, we may be able to tap into some of those channels where we can get those listings, and then your team can consolidate it, and then maybe weekly we get deals of the week.
Okay, I like that. So a sub club focused on deals of the week.
But it doesn't have to be a sub. I mean, I guess a sub club because we'd be targeting maybe accredited investors only, but just a regular newsletter, not even a club that's like managed separately.
Right. Oh, I mean, there could be two, one for accredited, one for unaccredited, and
Yeah.
it could run a couple of different ways. Yeah, that's an interesting idea. Okay. Any other thoughts?
Yeah, the slight problem with that is, so I get deals. I get 5 to 10 deals a week. I can't forward them on because they're confidential, right? The only thing what I could do is invite, if I am seriously thinking of investing, I can bring the sponsor in and share, and then they can share it. But they don't like it when you forward confidential deals out.
That is true. The way that left field investors works is they actually have specific sponsors that basically they sponsor the club, and they bring their deals in because of that. And that's not quite what we're looking for here, but that's how they get around that. One thing you could do is just post a link to the operator's webpage. Almost all the operators have some sort of form where you can go sign up yourself and get the deal.
Yep.
Yeah.
Well, one way around that, another way around that is you could have we can add some formality to the club where say, hey, if you're going to be part of this kind of deal flow, subscription, you have to subscribe. Number one, you have to validate that you're an accredited investor in writing, and then maybe you have to like recertify every year. So then instead of Ashish getting the deals, AIC would be getting the deals on behalf of all the members. So it would be, and then we would have to sign maybe an NDA with AIC only, and then you would certify to the deal sponsor that only AIC members would be getting it. And this is the list of the folks that would be receiving it, and they've all agreed to not share it.
Yeah, I mean, actually, that sounds a lot like what LFI does in terms of their sponsored operators, and so it's not a bad. Yeah, it's a good idea.
It's an interesting idea, James. That's what 506 does as well.
Yeah, and James is my last name. Happens at least once a day. So this is the first time it happened today.
All right.
I think I did that 2 weeks ago to you, or maybe 3.
Yeah. At least once a day.
All right. Yeah. Any other thoughts? And it could be on any of these topics that we have here, potential sub clubs. I would love to see a women's club, to be honest, and somebody spearheading that. That would be wonderful. A short-term rental club and other clubs like that as well. Okay, yeah, last thing. I'm going to start a deal analysis course in 2 weeks. It'll be a 6-week course. If you're interested in that, email me. And it is a paid course. So I will be teaching how to do deal analysis over a 6-week period. Let me know if you're interested. I'm going to start doing this on a regular basis as well. Basically paid training courses, and I might bring other people in to do them as well. So not just me. So I'm going to see how this goes, and we're going to iterate and grow on this. But basically, if you're interested in learning how to evaluate single-family home SDRs and commercials and triple net deals, we're going to go over what the deal looks like, fundamental metrics, how you do a cash flow analysis, how do you talk about and think about risk mitigation, what does leverage do to your deal, and how do you structure creative deals. All right.
Hey Daniel, one more idea. I hope I'm not hogging the stage, but
no, please.
As a group, it would be very useful if we had like a repository of different spreadsheet models that we could use for different types of deal, single family, multifamily, small business, LBOs. Like if we, kind of either share the models that we already have, or maybe we can source them from a third party, or maybe we even hire a consultant to develop our own models that we could use for ourselves.
Hey, I've seen the stats from my emails that go out. I know that about 50% of the people in this group are Linux users that use Firefox. So I think we have some technically minded people in the group. And I bet, if we as a group decided to build those out, I think we could build a really good models for each of those things that you mentioned there.
Yeah, for sure.
And of course,
we
looking
need
at
something
other ones that are out
in
there.
addition to the technical folks like Linux and computer science folks. We probably need a finance
Yes.
folks with a finance background.
Yep.
Who can
Absolutely.
model out some. Yeah.
I will say I've had a couple of technical people argue with me on how financial calculations are done in underwriting. And I just had to say, this is how the industry does it.
Right.
So I get that too. All right. Anybody else?
Hey, Daniel.
Any idea? Yeah. See you later, Michael.
I want to ask about the education stuff, if you don't mind.
Yeah.
I don't mean this to sound as negative as it might. You had kind of a start and stop on this previously in doing courses.
Mhm.
And I think the last go round of this, you had said you were gonna not continue on it. So if you're back again thinking about doing courses, I guess my question would be, is it are you committed to having this be a series, and if so, can you lay out what your intentions are for the subsequent courses? It might be good for the club to be able to see where you're headed with that, and for someone who might go through one or more of these, where they might be able to build and grow their acumen.
So the first course that we did, and it was about a year ago actually, was about how to form group investments. And we had a small group there, and we went through, I believe it was 6 weeks also, where we went over material on basically how to form LLCs that might hold a short-term rental or another type of commercial property. And the focus was on how do you group together in order to purchase something. And we went through the entire 6 weeks, and the videos are still available on my Google Drive to all the people that were in there. If you need the link, let me know. But honestly, my intention with this is to help people within this group know how to evaluate deals, and then of course also to find like-minded people that want to do deals together. And so talking about deal analysis, I think, is a good first step here. I have had people approach me about underwriting specifically. That's definitely a course that I'd like to do as well. And I'm open to different types of courses that might interest you. I've been an investor now in 14 larger deals, and so if I don't know the topic, I could potentially bring another person in. But I think the overall goal is just to have paid courses that will help people with specifics of how deals are put together, or how to invest, or how to use leverage in a deal, how to do due diligence on an operator, how to run a short-term rental, those types of topics. And you're right. I think what I would like to do is, I've heard deal analysis and I've heard underwriting, but I would love to hear from this group, and feel free to put it in the chat or just email me if there's a particular topic that you're interested in. Teaching is one thing that I've always enjoyed. It's what I did for Intel. I taught software. So let me know if there are other topics that you want, and we're just going to bring short courses that'll help raise the game of people that are interested. Does that answer your question, or are you looking for something more? Are you looking for me to lay out the next 4 courses that we want to teach?
Ideally, yes.
Okay. Send me, people in this group, if you're interested, send me topics. I will look over them, and I'll put together the next 4 courses. All right. Let's go on then. I want to talk about, in the current climate, how Good Samaritan Capital is changing. And we are shifting strategies right now. Basically, we have been talking about the idea of a flight to quality since 2001. And flight to quality for Good Samaritan Capital has meant fixed interest rates or floating rate with a rate cap, larger deals that are with operators that are vertically integrated, which just means that they own their own property management and or renovation groups. And in general, working towards better, best-in-class operators who are much larger. And so that has been going on since 2001. And the reason that was going on is because we've been saying for quite some time that we're going to run into a few years here where the commercial real estate market is very rocky, where people are basically getting pinched for a variety of reasons, which I could talk about here. And actually, I do have some slides on. I'll talk about them quickly. But basically, we're going to be going through a period where commercial real estate isn't cash flowing very well, where deals are starting to become distressed. But overall, the long-term trends are still very positive for real estate. Got some underwriting, +1 on syndication. Yeah, keep putting it in the chat what you'd be interested in learning about. So to talk a little bit about Good Samaritan Capital, our core values are investor education, creating paths for everyday people to invest in commercial real estate, diversification in asset class, geography, and operators, and focusing on creation in all our relationships and business opportunities. And when I say focusing on creation, what I mean there is that anything that we enter into needs to make it better for the tenants, better for the investors, better for the companies that are involved in either property management or renovation. The deals need to be win, 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 win all the way around, as the CEO of Whole Foods would say, 6-way wins. And I think you've all seen this before as well. We've had over 14 deals for a total of 3,200 units or more. These are in different locations. One of the things that's happening now is we are going into that period where inflation is going up, expenses are going up, and rent growth is slowing down. And so cash flow is becoming a problem for a lot of syndications that are out there, and several of my syndications as well. So I want to talk a little bit about what we're doing from a strategic point of view in order to address that. The first thing we did is that we actually have created a board of advisors. So Good Samaritan Capital now has a board of advisors. Tim Abels, some of you may know him. He was in the architecture group at Intel, but he also ran the several divisions over at Dell before that. He worked at Intel Capital doing analysis on venture businesses that Intel was going to purchase. And he is currently very, very invested in his own charity / fund, basically, where he is doing a lot of microloans over in Africa, in Uganda, in Kenya, in other parts of Africa, and trying to create micro-sized businesses over there, which is what he likes to do in his retirement. We also have put people on our team that we want to be advisors in particular strategies. And so we've created a fund, and the fund is going to have multiple strategies within it. We're finding an advisor for each type of strategy. And the first one is our new acquisitions and new construction advisor, Gene Pavlenko, who is here in the Portland area. He's been in the business of constructing multifamily units since 2005. He's got a history of doing that. And then an asset acquisition and repositions. A lot of you, of course, know Chandni Danjal, who works for Wisemont, and she is particularly interested in buying larger properties that can be converted into short-term rentals and cash flow that way. So think destinations for a family reunion, wedding event centers, places like that. So these three people are now on our board of advisors and are helping us build out various strategies within our fund. So what are we reacting to here? There's upcoming distress in the CRE market. And that's going to be in play for probably until 2025 is what a lot of people are thinking right now. And I happen to agree with that. I heard from, I think, Neil Bawa, the slogan "Survive till 25." And that's just to reflect the fact that right now, cash flows are getting very pinched in these deals. And so honestly, one of the points of the strategy is to focus on promising what we can deliver. And if cash flow is something which is very difficult to do, we're looking at new construction or other strategies that offer better long-term appreciation but lower cash flows. So for instance, in a new construction opportunity, there's no cash flow because nobody's living in the building while it's being built. But at the end, there's usually a higher return on your equity, assuming the exit is good. And so the calculus in a new construction deal is what will the exit be like in 1 to 2 years when the building is built. Housing. Oh, I accidentally copied two.
Hey, Daniel.
Yeah.
Maybe a comment or a question.
Yeah.
You know, you're talking about the, you know, sort of the cyclical nature of the market. You're hinting in on the idea of where things are with regards to where we are currently in the cycle. It might be good education. I know we've had one or two different people talk about it in a slide as part of their presentation in the past, but it might be an interesting topic just really to walk through in much more detail, ideally with sort of like, you know, maybe examples or something like that walks the sinusoidal wave of what this, you know, market
Right.
looks like, and, you know, where you should be positioning yourself as part of this phase to do this, and because of that, you need to get ready ahead of the time at this, be ready to jump out, jump in, you know, that kind of thing, to give as a general
Yeah, and actually in the GSC Growth Fund investment number 1, we talked about that quite a bit for Portland. I cut out a lot of those slides just because I knew I wouldn't have time today. But yeah, we could certainly bring in someone, or I could talk about what's going on in the market currently and why I think it's cyclical and why we're going through a rough period right now. And we've honestly been able to see this. You know, I think a lot of multifamily investors and commercial investors have been able to see this coming for quite some time too. So we could talk about why that is.
No, I agree with that piece. I guess where I was going with this is not only just sort of analysis of why we are where we are and what the reality is of the, you know, cash crunch and flight to quality and all that stuff is sort of part of what happens in this phase, but just maybe taking an entire period and saying, this is the crunch, this is the peak, this is, you know, this is where you should be buying, this is where you should be thinking about exiting, and therefore your deals, by the way, are this long, they're going to be exiting at this part of the cycle, and typical, you know, really just sort of giving guidance, I think, about where each part of that phase of that period people should be thinking about, you know, as they're evaluating their deals in relation.
Okay.
Anyway, thanks.
And to a certain extent, that's one of the reasons why I started a fund, because I think that we're going into an area where appreciation is going to be more readily available than cash flow. And so if you can take a fund, diversify it across operators where some are appreciation focused, some are cash flow focused, you can create a blended situation where a fund can perform both on a cash flow and an appreciation side. But Good Samaritan Capital has created a growth fund because I think that is what is appropriate for the current environment. And I'll quickly just talk about the 4 core strategies. Buy and hold right now. In terms of multifamily and commercial deals, very, very, very little actually is penciling out to be advantageous to investors. Good Samaritan Capital has only done 1 deal this year. And it's because we got a total exemption from all property taxes on the deal. And that grew the budget by 30% when the taxes were exempt. So that was what contributed to our NOI. And it's actually this property right here that we did. Actually, all 3 of these it's a 3-pack property. The second area where I think there's a lot of opportunity is banks are not lending as much. We're seeing 60% loan to value rates, 65% loan to value rates, and a lot of people are running it. A lot of businesses, syndications are running into cash flow crunches, and so there's a lot of opportunity in the preferred equity space where you come in and buy equity that has a fixed rate of return, but also participates in the upside of the deal. Or you come in and supply loans, mezzanine loans that have higher coupon rates and are ahead of both the preferred equity and the common equity. So that's strategy number 2. Strategy number 3 is continuing to find opportunities in commercialized short-term rentals. So wedding venues, destinations that where families can go to, places that are going to command a premium in terms of their cash flow. And then 4th, new construction. And so currently we have our first deal is a new construction deal, which is on 74th and Foster in Portland. And we're looking to build with Gene Pavlenko's group a 37-unit building in this area. And he has built a number of 31, 25s, several 25-unit buildings in this area. And so we have very good specs on what it'll cost and what the outcomes are. And we're projecting, or at least we're shooting for, I think I have it down here. Maybe I didn't put that in. We're shooting for an IRR in the range of 20 to 25% over a 2-year period. Of course, all forward-looking statements are exactly that, forward-looking. But that's what we believe we can achieve. We have the location that's entirely picked out. All the permits are ready and done. Gene has actually taken 3 years on the permits. And the permitting process is completely done. We're ready to break ground. And so we're looking for investors who are interested in putting their money in at the point where we're breaking ground. And it's a 1 year to build, 6 months to lease up, and 6 months to sell. And here's the floor construction plans. The fund that we put together, here are the fund terms. So we're targeting 16 to 19%. It's an open-ended fund, though, which hopefully will give more flexibility to investors than syndications do, because there are more exit points. So the idea here is that the fund actually has, whereas a syndication's got like a 4 to 6 year time horizon, and basically you can't exit until the property is sold. In the case of a fund, we would be opening up what's called redemption periods. I'll show those. I'll come back up to this. Redemption periods after major deals are either sold or reinvest or refinanced. And so what this would allow us to do is to open up periods where people could redeem their funds right after a particular investment has provided more liquidity to the fund. So if you want to know more about that, feel free to ask me. But I'm hoping what this will do is it'll give people more flexibility in being able to enter and exit when they want to, as opposed to a syndication that is locked in for the entire period. We're targeting about the rate that you would get from holding your money inside any sort of bond in terms of cash flow. In fact, we actually hold the money in T-bills or in money markets until it's deployed. So we're getting that. The structure it's a 5% pref, right around the amount of the cash flow, 70-30 split. Depreciation's passed through to the investors. 50,000 is the minimum amount, and this is for accredited investors only. And here are all the rest: our asset management fee, our legal and tax counsel. We have a third-party fund administrator, so I am not the one doing the accounting. The third-party company is doing the accounting for the fund. And they also determine what the prices are that people can buy and sell into the fund. All right. And so the idea is that the fund would continue on indefinitely. It's open-ended, and we'd be making 1 to 2 investments per year. The first one being this new construction, which will hopefully have a better IRR and will provide liquidity to the fund right around the 2-year mark. The second investment, I'm looking at investments that cash flow more so that we can meet that pref. and give a pref. One of the nice things about a fund is that if, for whatever reason, the market changes and the pref is not being met from the fund's point of view, we can always go in and find other more cash flowing deals that bring the pref up while preserving higher equity investments that go in. So we can create a blended fund that can be, unlike a syndication where if it's not cash flowing, it's simply not cash flowing, and you can work on the business in order to get it cash flowing. In this scenario, if something's not cash flowing, we can rebalance and bring in more cash flowing investments. So that's one advantage of a fund over an individual syndication. There's more flexibility. And if you're interested in that, feel free to go here, and you can look at our legal documents and the fund investor portal page. So that is what we're doing as Good Samaritan Capital. Some of the advantages for the investors is right now that our investors have 6 different portals depending on which syndication they're in. This is going to narrow it down so we just have one portal. It's also going to narrow it down so instead of getting 3 or 4 K1s, you're just getting 1 K1. So it's going to make it administratively a much better experience for the end investor, and it'll also be more flexible in terms of when you can enter or exit. And if a particular investment is not performing, the fund overall can be rebalanced in order to bring that cash flow back up. So I think there's several advantages to doing this. Now, this is for accredited investors only, and Good Samaritan Capital, my hearts are really to educate people and to bring people into real estate investing. So if you are interested in any particular investment that we're working on, we're also going to work with Tribvest in order to bring people in that way. That's if people only want to be in that investment and not have a diversified fund, or only want to be in that investment for whatever reason, or if they're unaccredited. So we're going to be working with Tribvest at the same time. So accredited investors can have a diversified fund. Unaccredited investors can still come into the same opportunities, just through a different mechanism. And we're working with them on how to do that. All right. I know we're over time, but I'll stay here for any questions that people have. All right. Next week, who do we have next week? Oh yeah, Ethan Gao. Ethan Gao is coming in next week. He is he has his own family office. And so he invests in other people's deals, and he is a key principal, and he's going to be talking to us about what it means to be a loan guarantor and a key principal. So tune in next week for that. And if you want to find out what's going on coming up, go to alternativeinvestingclub.com. And in fact, you can come up to events, #events, and it'll bring you right to the page. All right. Have a great week, everybody. And I'll stay online for anybody who wants to talk.
Thank you, Daniel.
Oh, Ryan, I sent you an email about potentially voice acting. I always said that I wanted to do that if Intel ever fired me. So I'm going to try that out and see if I can actually have fun doing it.
All right.
But I heard you had some experience with that, so I want to talk to you about it.
All right, perfect.
But
yeah, let's set up some time. Awesome.
Daniel, SAG is out right now, man. Are you going to be a scab?
What's this? SAG? What? I'm sorry, what?
There's an actor's strike going on right now in Hollywood. You're going to cross the picket lines, man?
Yeah, it's the perfect time.
Not in the guild, so hey, it's open season.
I actively joked with my Intel group that if Intel ever fired me, I'd go do voiceovers for Mazda commercials. So it actually sounds like a lot of fun, frankly. So I'm going to try something like that.
I can see that. Well, if it turns out to be good, let me know about it.
But any other questions, on either the club or where Good Samaritan Capital is going?
I had one on the fund, which I think it's a great strategy. Are there one thing that I didn't ask earlier in the week when you did the presentation, which was great, by the way, is are there some infusion assumptions that are built into that to achieve those redemption points that you mentioned? So for instance, you're going to take a round of investors on, certainly in year one. that'll help with the initial one or two projects that are ongoing. But in order to hit those redemption events in year 3 or year 6, are you banking on additional investors coming on board in years 2, 3, 4 every year effectively to achieve the redemption events?
Well, so let me answer that in two ways. First of all, the fund is actually structured so that investors can come in at any point. I'm not actually calling for investors to come in at one point or another. Anybody that comes in will, get the diversified basket of the investments that are there. So it's really up to investors when they come in. Having said that, since it's up to investors and I'm not, specifically calling for that, I'm not counting on that for the redemption periods. The redemption periods will almost always happen after a refinance or a sale of an asset, where liquidity is put back into the fund and people can then redeem their shares. So it's really more about the fund, liquidity moments or the individual project refinance and exit moments.
Got it.
Does that make sense?
Yep, absolutely. Thanks for that.
That said, Daniel, you probably also have, an operational liquidity level that you have to manage to. So it's not necessarily that I jump in on day one with my 500,000 and I get 2 years and 1 month later, I'm going to get my 1.5 million back, right?
Well, so whenever you jump in, there's what's called the NAV, which is the value that the fund is at that current moment. And of course, the goal is to make it more valuable in the future. So if you come in at a future date, you'll be coming in at whatever the current price is.
Yep.
Yeah. Any other questions? How many of the 30 people are people who just left to go get lunch? It's always a couple of those. All right.
I would, but
I
I've
may
got
have
another
a
meeting.
basic,
So.
Yeah.
basic question.
Yeah.
So for getting accredited, is there an organization that accredits you as an investor, or is it just evaluating the net worth of the particular person?
Yeah, there's a couple of ways to qualify as accredited, and the SEC and the IRS are the SEC actually sets it, but the IRS upholds the same standard. And there's two ways. There's the net worth qualification, and that says that you need to have at least $1 million in total net worth, not including your primary residence. There's also the income method of qualifying, and that says that as a single individual, you need to have $200,000 or more of income in the last 2 years, with the reasonable expectation that you'll have it this year. Or as a married couple, the same thing, 300,000. And then just recently, the SEC has actually created a number of other qualifications for people that are certified financial advisors or pass certain financial tests as well. And those probably don't apply to this group. So the income method and the net worth method are the two ways to determine whether you're qualified. And there's no certification organization. That's why we have to go to a third party, in fact, in order to verify it.
Okay, thank you.
Hey, Daniel, on that last part, as I understood with that more recent, sort of third option for getting accredited, I thought there was some version of it that was if you do enough education for yourself, that means you should have an equivalent knowledge that would make you, hopefully, good enough to be able to participate and understand, what you're getting yourself into, which became a lot more subjective about what the educational requirements are. But you didn't have to necessarily be a CFP or something for it. You could attest.
Yeah, the SEC introduced a lot of new ways to potentially become accredited, and I think they're really aimed at the financial services sector. And I don't know all of them. There's quite a few.
Okay, got it.
Yeah. All right. Any other questions? I'll hang on here until people want to go.
You may want to read through the chat, Daniel. There was a lot of activity going on. Ashish and I were answering a few questions, but you may want to peruse it before you lose it to see if there's anything you want to follow up with folks offline on.
Okay. Thank you.
Yep. See you later.
Let's see, how do I save?
Thank you. Bye.
Thank you. Save chat. Here we go. All right, everybody, have a wonderful weekend. I'll be at the Hillsborough Reptile Show with my kids this weekend.
Sounds like fun.
We've been looking. We missed it last year, and we had been watching the sign as I take my kids to school for like 3 or 4 weeks, and then we forgot about it, and so we were just kicking ourselves. And we actually put it in our calendar this year to go see the reptile show.
Well, enjoy.
Hey Daniel, when can we expect to hear back? So regarding that group of individuals being pulled together, were unaccredited, right? So you said you.
Yeah, that's actually a really good question. So with the new construction deal, it's organized as a joint venture where the fund is one of the partners. And that might be a different legal situation than where the fund comes in as an LP into a syndication or into another fund. And so I have to get back word from my lawyer to make sure that that's something we can do in the case of a joint venture. I actually suspect it may not be, but in other future deals where the fund is actually signing a private placement agreement, we would be able to do that. So
okay.
Stay tuned. I don't know if it's possible in the new construction deal that's going on. And I'm trying to get clarity on it.
All right, sounds good. Thank you.
All right. There's 10 people left. All right, everyone. Have a great weekend.
Have a good weekend, Daniel.
Bye.